Hi there, guys. Good morning. So, on Thursday, we discussed bringing together entries, information from source documents, and getting that information into subsidiary books, and then into the T accounts in the general ledger, and from the T accounts, preparing the last key T account, which was the income statement, and therefore finding profit from that income statement T account, and also bringing down all the balances from the asset, liability, and capital accounts to sort of get a picture of what our financial statements will look like. Okay, so let's go through that very quickly and see what's going on. So this was the exercise we worked with for a business owned by Bianca, who runs a business called Fashion Frocks. And we started off with this idea that she started the business with £1,000. Now we said that because this is this is an unusual item, it's the first time it's occurring, we put this information in what's referred to as the general journal, because we record information that's unusual, one-off items in the general journal. So let's do that. That's the first subsidiary book we're going to go to. So sheet 1, actually you should label this. We label this subsidiary books. Subsidiary books. Right. And so the general journal is our first subsidiary book we're going to be talking about. And how do we do this? We go debit and we have credit. So what do we do? This is written out. So debit bank, and debit bank 1,000, and credit capital for 1,000. Done. And then we state very briefly what this relates to, being the introduction of capital. Right? And that's that. And we have a second one, if you remember from the class, which was to do with closing inventory. The key point again is that nothing can go into the T accounts, which is this page. Well, I'll just call this the general ledger. Nothing can go in here without having a post in here. So that's really key. So before you think you can put anything in here, it must be in here first. Question is where. So we have this in here, but because this is also to do with money, we must record the fact that we have received money on the 1st of June. Oops, sorry. We must record the fact that we have received money on the 1st of June in our bank account. So this is my cash book. This is your cash book is a subsidiary book. We've talked about this before, just to verify. Let me merge and center that. So this is my cash book staring at me right here. So we have received money in the bank, and so we have capital. And in this case, today, we don't have any cash sort of receipts or payments, but it's quite normal for this to be the case, for you to have this type of thing. Okay, so that's the situation. Let's look at what happens on the 2nd of June. On the 2nd of June, we buy some goods, 350 on credit from Liam. So the first thing we do is we go to our purchase day book. And then on the 2nd of June, buy some goods from Liam for 350. Right? I mean, the pound signs and all the others you can put in here if you want to be more clever. I'm just trying to get the information in. Let's look at the next thing that happened. You sold goods on credit to Ryan. So we go to the sales day book. These are all subsidiary books. So we go and sold goods on the 4th of June. And we sold goods to Ryan on credit for 220. And that's in there. Let's go to the next one. On the 5th of June, we sold some more goods, 115 to Ellie. The 5th of June, sold some more goods to Ellie. Oops, jumps a lot. 115. Let's look at the next thing. What happened? We weren't happy with some goods, we returned some goods worth £100 to Liam. So we have purchases returns on the 6th of June to Liam. This is a credit note, right? We want Liam to send us a credit note to say that we don't owe him as much as we did. Now let's start looking at the logic of this. What am I saying? Yes, this is a revision. This is all revision, so don't ever see this as being too boring. Right, so Liam, you sold some goods, 350. You owe him 350. You return some goods worth £100. So in your mind, you know that, well, when you get to your general ledger, you know that overall I'm going to be owing this guy. Trade payables should be about 250, or should be 250. That's what you owe him. Okay, and then on the 7th of June, let's go what happens next. So we're up to here. On the 7th of June, you bought some goods worth £400 from Z Limited on credit as well. So let's go to, again, let's go back to our purchase day book. On the 7th of June, we bought some goods from Z for £400. And then let's look again. What else did you do? On the 7th of June as well, you bought some goods worth £800 from Jenny. Jenny, 800. Good, so far so good. Let's carry on. From Jenny, and then you sold some goods on credit to Maria on the 10th of June. On the 10th of June, you sold some goods on credit to Maria. So we come back here, 10 June, Maria, 350. And then on let's look at the next thing. And then on the 12th of June, you sold some goods worth 175 to Mac. So you sold some goods on the 12th of June. Yes, Mac for 175. Good. And we come over here. Maria wasn't happy, so she returned some goods to you, so that's a sales return. We have actually, I can actually reduce the spaces between these, because it's taking me a long time to scroll down. Okay. And let's get rid of this space as well. We don't need all this. And so, yes, that's what it was. Maria, on the 15th of June, Maria returned some goods to us. So that's a sales return. On the 15th of June, Maria returns. So we send her a credit note worth £50. Okay, and then let's go back to our page. It's the 15th of June, and then we returned goods, £80 to Z. So let's go back up here. So we return goods on the 17th of June to Z. We're happy with them, and the goods are worth £80. Okay, right. So up till here we have done quite a lot of trade. Yes, and but from then on, from the 17th of June, quite a bit happens. That's just to do with check payments. So let's look at that. So on the 17th of June, we paid for the goods to come in, and that's what's referred to as carriage inwards. So we wrote a check out for the goods to come in. Just maybe a straightforward delivery charge, and that of course comes straight back to the cash book, right? So on the 17th of June, carriage inwards, yes, and we paid £20 straight away. Then let's come back here. Then what happened on the 17th of June? We paid carriage outwards. That's for the goods to go out to the customer. Carriage outwards for the goods to go back to the customer. £30. And then what else did we do? So we paid wages all on the 17th. Let's see if we can do all that together. Remember, wages for 100, electricity for 50, rent for 20. So let's do that. Oops. So we do 17th of June again. 17th of June. 17th of June. So we did wages, electricity, and water. Wages 100, electricity 50, and sorry, not water, it was rent. That was rent. It's not a lot of rent. 20. Okay. So we have that in there. And let's see what's finally next. And then we start sort of paying and receiving payments. And then it says that we paid Liam 200 by check. Well, we paid Liam 200 and we received a discount of 50. So we should have paid 250, but we just paid 200. We got a discount of 50. So we paid Liam 200 on the 18th. And we had a discount of 50, and we paid out 200. Yes. Then let's look at the next one. We received 200. Let's do the 20th and 23rd together really quickly. We received 200 from Ryan, gave him a discount of 20. We received 100 from Ellie, gave her a discount of 15. So we should have received 220 from Ryan, but we just 200, and we should have received 150 from Ellie, but we just asked for 100. So let's go over there and do that here on the 20th of June. We received from Ryan and Ellie on the 23rd of June. So Ryan, we received 200, and we gave him a discount of 20. Ellie, we gave her a discount of 15, and we got 100 back from her. Then we pay, let's see what happens next. Then we pay on the 26th, we pay Z £300 by check. We receive a discount of 20. 26th of June. Z, we receive a discount of 20, and we pay her a check of 300. And let's quickly finally see what happens in the next couple of days. So let's do all these together. 28th, we receive 200 from Maria and 100 from Mac. So Maria gives us 200 and Mac gives us 100. And then finally, what do? We pay Jenny 400 by check. And this is on the 30th of June. Jenny. We pay her 400 by check. So, this is how we get all those source documents into the subsidiary books. The question is, what does all this information mean? Means we're receiving, this is the first time we're recording a lot of this information. We now have to go and do the double entry in the general ledger in these T accounts. But before we can do that, we must total these up and make sure we're comfortable, because we're only interested in totals. So I'm doing this on the computer, so I don't even have to manually, mentally, sort of even think about this. I'll just press auto sum and I have my total there. I'll make that bold. I'll do the same thing here. And the auto sum, make that bold. And finally, do the purchases returns. Find the total. Make that bold. And the same thing here. Find the total and make it bold. So these are the figures I'm interested in. Purchase returns total, that total, sales returns total, and the total sales. And sorry, total purchases, total sales. We have that. And we'll probably have to break this up in terms of knowing what whoever has received. But this is a cash book, and we discussed balancing cash books, didn't we? So, well, with the discount, well, I guess we should really balance this. And anyway, you'll have to balance this anyway, because this is an asset, right? So you need to do the balance brought down anyway. So we can do that now, just as a way of practicing. So the whole idea is, as I said before, is to look at the total here, and you can see the total here says 1,600, and look at the total here. And he says about 1,120. So I guess if I want to know what the balance carried down is, the balance carried down is, let me see if the computer will do all of this for me. Oops, sorry. Let's see if it'll do that. Let's see if it is smart. Is it this smart? No, it's not. Okay. So, I can just do this in the little corner for now. Oops, let's just say, let's do this very quickly. We found this already. We found that this was 1,600. So I know that this is equal to 1,600 minus this minus this minus. This is really long, but let's just quickly tie this up. This minus this minus this minus this minus this. Right, and that's my balance carried down. That's how much you have in the bank, isn't it? That came in. And this is how we do this. So, as I say, this is all revision. Make sure you're using this to revise, in case you're not, in case. And then do this total. And then what we do is we have a balance brought down on the 1st of July. Balance brought down 1st of July of 480. Right, so smarten this up. You have that, and you have that. Right, and there you will have it. Those are the big figures that you're interested in, and that's you done with your subsidiary books, with all your totals. Sorry, of course, your discounts. Of course, what am I saying? Bring your totals. You bring your discounts. Total your discounts as well. The total discount on there, and your total discount is there. Right, and these are really. I guess we could just do that as well. And we'll do that as well. Very jumpy today. Okay, right. So that's how we do the subsidiary books. In the next video, we will look at the general ledger, just in case you wanted to get a coffee or anything. But come back in like a few minutes and look at the general ledger. Okay, thank you.